All right, everyone, give me 1 minute. I'm restarting the Google search. Okay, I think it's this one. Let's see. And here we go. Let me open the previous tabs. And I had this one here. So everyone, let me know how you're doing today in the chat. Like, I really want to know if you're doing great. I want to know if you know about Ninja Fantasy Trader already. So please let me know that in the comments down below. All right. Can you? Can anyone hear me now? All right, everyone. Hello. Can anyone hear me now? Can anyone hear me now? Let me know in the chat. We're not hearing you. So, all right, everyone. Let me know if anyone can hear me now. Please down in the chat. I thought my mic was working because no one told me anything, but it's fine. We are not hearing you. Hello. Well, anyways, I'm gonna continue because I think my mic is right now working. So if not, just again let me know. All right, everyone. So I'm gonna go back because again, if no one was able to hear me, I want to explain what I was actually talking about because it was kind of important. So let me go back here to the CPI report. Give me 1 second, everyone. Okay, so my mic is working. Perfect, perfect, perfect. Okay, perfect. Let's continue, guys. So I'm gonna start over. I'm sorry for the mic issue. So what I was actually talking about was the CPI report. So give me 1 second. Okay. All right. So what I was saying in the beginning was that the CPI report was released yesterday, which is the Consumer Price Index, and this report over here ended up being higher than expected. So the expected amount was 8.8%, but it turned out to be 9.1%, which is higher. And this is kind of bad because the Fed, which is the agency, not the agency, but they are the um, they are the ones that are in charge of managing the inflation. And if we see an increase in the inflation, that means that they are not taking the best decisions to manage inflation. So this creates a bearish sentiment in the market because if people see that inflation keeps going up, they don't want to invest in the stock market. And this is bad because a lot of liquidity comes from investors, from retail traders. I'm not saying that retail traders are the ones who move the market, but I'm saying that they are the ones who add a lot of liquidity to the market. And if we see that people don't want to invest because inflation is going up, that creates a bearish sentiment. Now, with that being said, any questions regards that? Was that clear? Please write here in the comments if you're hearing me, or if you if the information is good. Please let me know. Anyone in the chat? All right, perfect. Okay, good. Thank you, everyone. So, moving on. My best advice when these type of reports are basically getting out of the market, don't trade if you don't really if you're not really analyzing the tape, or if you're not seeing anything like certain, because these type of reports create a lot of volatility, mixed flows in the market, and you don't want to trade with all of that. So moving on, what I was going to explain in today's class is the option chain for Thinkorswim, which is this app over here. So in case you don't know, Thinkorswim is basically, it is like a broker app from TD Ameritrade, which is a bank, and it's really useful. I like it a lot because it has so many functionalities that honestly it allows you to trade to a whole new level. But with that being said, as I was saying before, here when we go to the analyze area, we will see different tabs. We will see the underline, the trade grip, the option chain, today's option statistics, option times and sales, and product depth. I'm not gonna explain all of them because honestly, I can make a class for each one of them because they have a lot of information, and to explain all the information that they have, like each tab has, I can take a while. But with that being said, let's begin with the underline, and then I'll focus in the option chain. So for the underline, before continuing, does anyone has any company in their mind that they you want me to search to explain the underline? It can be any company. It doesn't have to be a special company. It can be any company. A company that you like. It can be GameStop if you like video games. It can be Tesla if you like cars, electric cars, of course. But if not, don't worry. I can select one. Okay, let's see it. Okay, no recommendation. Don't worry, guys. I'll select Tesla then. So for Tesla, here on Tesla, we see that when I enter the company's acronym, or I should say the code for the company, I will see in the underline the last price. So the last price is basically, so the last order that was executed at what price was it executed? So that's what last price means. It means the last price an order was executed. Okay. Then when we go to the net change, that means how much the action price has changed from yesterday to today. Now we see it's negative 5.98, and it goes like that. So it means that Tesla is moving down today, probably, in comparison to yesterday. Let's see. So effectively, yeah, yesterday Tesla, it had a close about here, and right now we see that the price is almost here. So yeah, there's a bearish difference there. Now let's go back to analyze. And when I go to, and when I see here the bid and ask, this is one of the areas that people have a lot of questions. So this is why I'm gonna bring my whiteboard, and voila, here's my whiteboard. So what is the ask? Like, why is there a thing that is saying ask? Well, first of all, when we see the ask, that means that here is a person who is willing to sell their shares. Now, if you want to buy Tesla, you need to buy in the ask, because here's the column where a lot of people are willing to sell. Now, if you want to buy at the bid, trust me, your order might never be executed because you might need to wait price to reach the bid. So the thing is that if you want your order to be immediately executed, you need to place your order in the ask. But if you wanna, for example, sell your shares for Tesla, you need to sell them in the bid. Why? Because here we have a person who is willing to buy the shares that you're willing to sell. Okay? So hopefully that's clear. If not, just type it down in the chat, and that will be fine. So yeah, as you can see, if I hover here in the ask, it says buy. So if I click here, you see that I have a buying order for stocks of Tesla. But if I want to sell them, I can click here, and I'll be selling shares. Perfect. All right, everyone. So this is the volume. Volume is basically the amount of transactions that are happening that day. So if we go here to chart, probably we see here that the okay, here we have a volume. Let me move to the daily volume. Give me 1 second. Oh man, I hate this app sometimes. Okay, and if I click here, all right, perfect. Okay, let's see. So volume is basically the amount of transactions that are being traded in the market, and when we go to open, that means this is the so when the market opens at 9:30, this is the value that it opened at. But then we have the high and low. High is the highest value that in the whole day the plot for Tesla has reached, and the low is basically the lowest point that Tesla has reached. For example, if we go here to, oh wow, I didn't move. Perfect. Give me 1 second, everyone. Okay, so here you see the here in this is today's chart for Tesla, and as you can see, this blue thing is the volume. Let me zoom out so you can see it better, and maybe I can move this a lot better. Okay, perfect. There we go. So today's volumes is about 19 million shares. That's the amount. And where am I seeing this value? Just here. If you hover in this bar here, you will see the volume reflected here. And yeah, basically, as you can see, it's the same one that we are analyzing here. And the open, high, low, if we go to the chart for Tesla and we go to the 15 minutes chart, what are we seeing? What are we seeing? So okay, everyone. So we see that when the market opened at 9:30, Tesla had an opening here, but then it went up to this area here, which is the highest point in the day, and then it went all the way down, and the lowest point was here at 688. Now, if we go to analyze, we see that those values are the one that are reflected here. So it opened at about here at 704, which is this value here. And this is the way I analyze the underlying. So it is really useful to know this information because honestly, a lot of people only see it, but they don't really know where these numbers are coming from. So hopefully that's understood basically. And let's move on to the option chain. So this class is taking more than expected today, but hopefully uh, we'll be able to cover everything. So yeah, let's move here to the option chain. This is my favorite part. So as you can see, whenever we are analyzing the option chain, these are the contracts that are created currently. So the ones that you see in white, those are monthly contracts, okay? Meaning that these contracts are created, but in comparison to the weekly contracts, which are the ones in yellow, the monthly contracts are open with a lot more anticipation, meaning that they have more time open in the market. Why? Well, it is kind of interesting this because monthly contracts are really special because a lot of the institutions and market makers and many important people they play around these monthly contracts. Why? Because they had a lot of time to add the liquidity for their positions in those contracts. So weekly contracts they don't have as much liquidity as the monthly. I'm not saying that they don't have liquidity, but they don't have as much liquidity as the monthly contracts. Now, with that being said, if we move right here to the right, we see the implied volatility. So forget about the name, and here's the definition. So implied volatility is, I'm sorry, I don't know what's that sound. It sounded like a plane crashing into my house. But anyhow, we have here that it says plus minus 21.7. But what the heck does that even mean? Well, it's saying that price for this date here might move $21 up or down. So if I go here to chart and I calculate, it's almost at 700, but it might move $20 down. It might move $20. It might move 20. Oh my god, give me 1 second, everyone. So it might move $20 up, or it might move $20 down. And what's the probability of that happening? Is seven. Sorry, is 70.94%. That's basically the meaning of that. So what is the probability that price is in between this whole area is 70%. Okay, so that's what it basically means, and this is very useful because if you're saying, oh, Tesla is going to I don't know, give me 1 second. Tesla is going to $1,000 tomorrow. Well, guess what? That's not true because the implied volatility is telling you that the highest likelihood is price moving only $20 up and down. So hopefully that's clear. But now, if you want to say that price might move to $900, then you might check the. Let me see here. The 20s, the August 26 contracts, because they are the one that are telling you how much price can deviate. And for example, right now the price is at 700, but if price move almost $200 up, here it might it might move to this day here to 26 August, not before, because implied volatility is not telling you that. So that's the first thing about the option chain. And now let's open a monthly contract because this is the white one, and not just because it's the white one. Well, yeah, it's pretty much because it's in white. That's why it's the monthly contract. And you're probably seeing a lot of numbers and you having a headache or a panic attack. But don't worry because it's simple. It's not like that hard. Hopefully, it's not that hard. And let's go here to customize because I want to show you all the variables that I have in the option chain so you know what they mean. So first of all, I have the implied volatility, I have the volume, I have the open interest, and the delta. Just those for now. Sometimes I have more, but for now, that's more than enough. So you might be asking yourself, oh, so you have implied volatility, but isn't it well like here we have implied volatility, but also here we have implied volatility. Like, I'm confused. Don't worry, I'm gonna explain that like later. But for now, here in this section, we have the strike prices, which if you don't know about these, I recommend you to maybe see Ninja Fantasy Trader course because we explained that over there. But finally, here we have the strike prices, and here we have the expiration. So today is July 14, meaning that all these contracts are expiring tomorrow. And if we go from left to right, here we have the calls, and on the right side we have the puts. It says here, like you see, puts, and here it says calls. Great. So as you can see, each strike price has an implied volatility. And what I can tell you is that as the implied volatility is higher, it means that a movement might happen. Now, a great example are earnings. Why earnings? Because if you're trading earnings, day trading earnings, which is a crazy thing, if the movement is not like exponential, you will see that the implied volatility for each contract might go up. And the reason is that they are charging you more for that movement because the people who are in the market, they know what is going to happen. Well, not 100% that they know what's going to happen, but for most of the time they know what might happen during an earning or something like that, and they're going to inflate the implied volatility. Why? So the contract costs more, and because once the implied volatility is really high and goes down, for example, imagine that implied volatility here is saying 150%, and after the earnings, that contract goes back to 64. That is so. That is what some people call implied volatility crutch or ID crutch. Why? Because the implied volatility was really high, but it went down. And if you had a buying option, trust me, you would lose all your money, like for sure. And then we got here the volume. This is the, don't confuse this volume with this one here because this is the action volume. This is the options volume, okay? It's not the same. It's not the same. Okay, so with that being said, this is the volume, and we have here the open interest. So the open interest is basically how many people stated or went out of their position the next day. So, for example, here we see 50,000 people trading this option here, and the open interest is 13,000. So what that means is the following. So there are 13,000 contracts that are staying open, meaning that people might be thinking that price might be moving up, or people might be thinking that price might be moving down. How do we know this? Well, honestly, the only way to know that is by analyzing the tape. There's no other way, because you want to see who is being more aggressive inside those contracts. So, yeah, hopefully that's clear. But here's another thing. So, let's say that those 59,000 contracts get added to the open interest. What that means is that there was a high volume that was not day traded, meaning that there might be someone there who added a lot of positions, and those positions are open, meaning that they haven't closed those positions. And that is important because uh, they might be waiting for something. And what is that something? Well, we need to figure it out because, that's our job as traders. And moving on, we have the delta. The delta is one of the most important things when it comes to the Greeks. And what is the delta? Oh, everyone, delta. Let me delete all of this. Give me 1 second. Oh, there we go. That was a faster way to do it. So right now here, if we want to buy a contract for Tesla, just like this, it says here that it costs 11.8. So let me write that down here. All right. And this is for which strike price? This is for 705. Okay. If I buy this contract at 11.8 and my delta here is 0.54, I want to know how much I'm going to earn if Tesla goes up, for example, at 706, or I want to know how much that contract is going to decrease if Tesla goes to 7.04. So here we got the delta. Here we got the delta. Perfect. So if Tesla move to 706, I need to add this value to my contract. So if I'm not mistaken, and if my math is correct, my contract is now gonna be valued in 12.34. Just because this is what the delta is telling me. So for each dollar that the price increases, I'm gonna win this amount here. All right? Hopefully that's clear. But if the price decreases, for example, it decreases $1, I'm gonna lose 0.54 dollars or value from my contract, from my initial contract, which is this one. And I'm gonna give me 1 second, everyone. Does anyone have any question with what I'm explaining right now? Please let me know in the comments down below, honestly. If not, it's fine. Okay, so this should be. Oh my god, my brain's fried today. I'm sorry, everyone. So it should be. Sorry. 54 minus 11. Are you serious? Minus. Okay. So this is 11.26, I believe. Let me check that in my. Yeah, yes. So if Tesla decreases $1, then my contract would then be valued in this amount here. So it had a decrease. So for now, that's basically the first explanation I can give you for the option change. Hopefully all of that was clear. I'm gonna be open now for any question because I know that was kind of a lot. The option chain again, it has so much information that for me to explain it maybe all in a class is impossible. So any question, everyone, before I finish today's live session? Any question? Any question? So while you guys write any question that you might have, I want to do a quick reminder, and it's that Ninja Fantasy Trader has finally released the first financial NFT game where you can play and earn while you're learning. Okay, so this game allows you to practice your trading skills, but if you don't have any knowledge, don't worry because we are currently offering free courses. So I recommend you to become part of our community by joining our Discord. So with this being said, let's move on to the question. So I see no question. That's perfect. That's fine. I'm gonna show you pretty quick the Ninja Fantasy Trader game. So give me a second, everyone. It's loading. So first, you need to type here ninjafantasytrader.com. Then you can move to the marketplace area. And when you are, after signing in with the MetaMask, you can go to play. And this is really cool because currently the area that we have been developing is the cryptocurrency. And whenever you click here on cryptocurrencies, on the left side, you will see your samurai here. And these tokens are the amount of trades you can do in a single day. But here's the thing that we have a variety of different cryptocurrencies that you can select, and with those cryptocurrencies that you can select, you can trade them. For example, here we have Bitcoin, and let's say that I haven't analyzed Bitcoin honestly. Here's like a bull flag, and this looks kind of like a bull flag here. Oh, this is so cool! They finally added it. So this platform here, let's say that probably that there's gonna be a breakout. So in our platform, the cool thing is that you're not gonna lose any money if you don't do it correctly. But if you do it correctly and consistently, you're gonna win a lot of benefits that I want you to know them by joining our Discord community. So let's say that you think that this is a structure, and after breaking this resistance line here, price is gonna keep going up. So you can do a trade. Here I have the. Give me 1 second. I'm gonna place a random lot size, and as you can see here, I need to wait 60 seconds for the trade to close. And after 60 seconds, I can finally close my trade, either if I was in positive or either if I was in negative. Okay, so let's wait those 40 seconds. And this is really cool because you can, you can trade while you are learning, and you can implement everything that you are learning into our platform. This is why it's so great and cool. And we still need to wait 20 more seconds for the trade to close. Hopefully it goes positive because honestly I haven't analyzed this. I'm just doing like a random trade here to show you the platform. Okay, so right now the P&L is positive. I might be able to close the trade in 1 second, and there we go. When we close the trade, here you will see the MTC earn buy the trade. So it's closing there. Give us 1 second while it process the trade. Perfect, everyone. Give us 1 second. It might be my internet connection that's really slow. Probably that. And in the meantime, while this closes, is this while you keep recollecting NTC, you can do battles with your friends. We will have tournaments where we are going to offer a lot of cool prizes that are going to be really amazing. And yeah, I don't know what's happening honestly. Let me refresh the page. Yeah, maybe that was a glitch. But yeah, on the meantime, that is our platform. Right now, I need to select my trader, but I enhance you to visit our Discord community, which is really great. You're gonna love it. And thank you everyone for being in today's live session. Take care. Bye bye.